The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Now, Tom O'Brien, Darrell Martin, and Steve Rhodes.
Welcome, folks. Steve Rhodes, Tom O'Brien. We appreciate you growling and prowling out here with us. We have the Dow right now up 25, Nasdaq up 17, S&P's up 7, gold's down 950. Gold's going to be rocking and rolling, folks. Friday, cooking. Bonds down 11 ticks, and King Dollar's up 224. If you haven't test drove the Nadex product, folks, come over to our website at TFNN, because this is the day right now. We're going to have some nice volatility out here, folks. So you come over to TFNN, you'll see the Nadex banner right there. You can hit that banner, open up the account, and put $25,000 of funny money into it. Bottom line, we'll have a little field day here. Steve Rhodes, what's going on?
How you doing, my man?
Doing great, man.
Now, tell folks, share with folks, why do Fridays tend to be such typical volatile days in the metals marketplace?
Well, what happens, as we both well know, when you get a downtrend going, folks, okay, at 1:30 Eastern Time, the pits close. So what ends up happening there, let's say you can still go to 4 o'clock electronically, but the reality is that from 4 o'clock Eastern Standard Time, folks, up until, Sunday evening at 6:30 Eastern Standard Time, guess what? You can't move a lot of gold.
Yeah,
so it's the hot potato. I mean, and that hot potato, folks, gets hot, particularly when you're at lower swing points, which we are right now inside that gold contract. And it's problematic. It really is. It's going to be interesting watching this shake out because the dollar went topside. She rejected lows again yesterday. She's up 229 right now.
Yes.
And this is kind of coming out like like it could be a heavy day. I mean, it's still early. But the way that they like to hammer gold is little by little and then boom. Just let the whole thing just drop out.
Yeah, now as you're looking at it, so, I mean, right now we're looking at this coming back into that June 28th level. The way gold trades, you think that area is going to hold?
No.
You don't? Oh, okay.
Yeah.
Now, is some of that correlation also because of your take on what's going on with the U.S. dollar index, too?
Yeah, it is. Because what happened here, folks, is this, and as we're doing this, folks, believe me, I'm selling gold short in a big way right now for the next 2 hours. And what's happening is this. There we go. I'm done. Okay. So
that's great because we're both managing trades while we're doing the show.
Totally. So, folks, if what I just did there, I just did that one on the Nadex platform because the risk was minimal. It was like $500 for 1,700 or something. But it's, so we can walk through it. But here, let's just walk through the market first. So what I'm looking at is this. You have so we bring it over and. The deal is, is that bottom going to hold? Well, realistically, it's like, okay, is it going to come into it, spike it out, And I've gone back and forth a dozen times, like, okay, it should hold. But guess what? The way gold has been trading, particularly because we had that big Fed day on the 18th, it gave it up in spades, right? And here's the kicker, which Steve just said, folks. The dollar index has been at lows. Gold should have went to the moon. It had every reason to go up, get into the moon. And guess what? It couldn't go. Now the dollar index has rejected lows again and is moving. And, we'll see just how far it can move. But right now, it almost made it inside the range. So watch what the dollar did this morning thus far. We're at 80.10. It's 80.17. You get inside 80.170, guess what? You're inside the range. It's not in there yet, but what we have got is that you got the expansion off the bottom. The first expansion out there. Someone came in really nice at 3 o'clock in the morning.
Yes.
Yes. So it's going to be wild watching this thing shake out, particularly because, what we do have inside the government right now, is that they're all insane. But the backlash is coming, man, and the backlash is coming out of the business community, man, So...
Yes. No, I know. What's putting some energy into the U.S. dollar index, the Great British Pound, which has been Great British Pound U.S. dollar. Now that's like I think the second or third weight. I think it's the third weight. I think it goes the euro, then the yen, and then the pound. But I think the pound and the yen are pretty close as far as weighting structures with inside the U.S. dollar index. But the Great British Pound, what it did is it broke above two patterns out there. It broke above a .786 Gartley sell and a 1.272 butterfly, and it did that also on Uncle Ben Bernanke Day. So whereas gold gave it up, the Great British Pound continued its trek higher. So yesterday was the very first time that it gave us any kind of real sell signal, and today you're getting some follow through on it. I had been looking at the Great British Pound at least make the run up to about $1.63. It only got up to a high out here of 162.5. So pretty close. But it seems like that so the Great British Pound is one that has been giving it up first so far. The euro hasn't participated. If the euro does actually give it up, then you're really going to have some action inside of the U.S. dollar index, because the euro at this stage, might take. Today is the very first time when we're seeing any kind of significant bullish reversal on it. And if the euro closes below 135.78 out there,
yes,
then that's giving your first bearish indication. And then what you could see is come Sunday at the open, if that continues some follow through, then you see that U.S. dollar index really take off.
Yeah, no,
but it's going to need that euro to really participate in it.
No, it absolutely is, man. And I think a lot of that's going to have to do. It seems like the rhetoric that's coming out this morning is that they know that they have to put the debt ceiling together with it.
Yeah.
And what is happening is that it's businesses that are getting hurt more than anything. And of course, the deal there is that watch the biggest. Move behind the Republican Party is the Chamber of Commerce, and the Chamber of Commerce is flipping out right now, totally flipping out. Because it's basically destroying businesses left and right. So it's like, oh, really? Is that what we're doing?
Yeah, look, it is. It takes all my energy to not turn the show into a political show, not the one that we do, but my morning shows, and to just hold back because you use the word insanity, and I think you're almost being too kind.
They're all nut jobs. There's no doubt, man. But they're playing with people's lives.
They are.
And this is serious business, man, because people are just starting to get on their feet. And it's like, man, you got to be kidding me.
No question about it. And even if, individually you don't somehow feel it, there's still a lot of folks out there that need to collect those checks.
Oh,
they got to get paid. They got to work.
Yeah, we're all going to feel it. If you think you're insulated, folks, you're not. The government... The trickle down inside that government is big, man. Those types of flows. It's just a matter of when, Yeah. So it's crazy, man. But I have right now. I think what we're going to see is that the hammer is going to come down because there's way too many stories out here this morning that normally the community that would be right behind the Republicans, they're flipped out right now. I mean, there's 5 different stories on Bloomberg that that there's a problem. And the biggest one is the Chamber of Commerce. The Chamber of Commerce is the largest raiser of money for them, right? And they bottom line, they told them to take off. We're shutting down. So it's like, oh, really? And it's all about money, folks. It's always about money. How much money's in whose pocket when, so...
So we could be taking a look at this thing being pushed off for potentially up to 2 weeks, right into the 16th, 17th of October, when the debt ceiling
issues. That's what I was thinking until I saw those stories this morning.
Okay.
When the stories that are coming out this morning, what they're talking about is that they're talking about some furniture makers down in the South that are getting hammered beyond belief because what's happening is that the FHA is closing down the loans, right?
Yes.
So what ends up happening there is that the furniture makers are getting hit. That's, and you're talking about big numbers.
Right.
Then so when I see those stories, I'm saying to myself, you know what, man? These...
we'll see. There's some pretty big egos. There's some pretty big egos out there.
Well, those are all supporters of. They thought that, hey, listen, yeah, we want to save money, but the bottom line is that when they shut down the government, their supporters are basically getting hurt more than a lot of other people are getting hurt because of the fact that business is a Republican deal.
Yeah.
So what's going on is that they are getting hammered, and they're saying, okay, hold it. What are we doing here, man? We just hammered ourselves. So when I look at that, I'm saying to myself, you know what? Over this weekend, there might be some real hammering in saying, guess what? You're going to go in there. We want this government open back up because contracts. I mean, no small business can really get hurt for 3 or 4 weeks unless they really have some good bread behind them. Right.
No question. And so it makes carrying. So back to the premise of, Fridays can be extremely volatile days, especially in the metals marketplace out there. But you've got to make a decision to hold your long or short position over the weekend.
That's right.
And so, as you were saying, in a market where you've got a descending market, a downtrend in place out there, makes it a little bit difficult to do that.
No doubt. I would not. I would not be long gold, but I would be long the S&P.
Yeah,
that's where my head's at right now, which is really weird, but that's the bottom line.
Well, no, look, even in this morning's newsletter, I gave my clients all the reasons. We got a confirmation yesterday. We got enough of a confirmation yesterday. Finally, the New York Stock Exchange kicked in, gave us the type of confirmation that we needed, that the bears should be able to take control of the market. That makes today's action really important.
Okay.
Because when when we're trading out here and you see one side get control of a marketplace, they should be able to then have the momentum to keep moving it in that direction.
Right.
So if they fail to do that today, that'll be kind of what I like about the market setup today and yesterday was that we had the S&P coming into an area of support. The futures contract, the daily futures contract coming into the bottom of a price channel out there.
Sure.
The S&P was coming into an area where it had broken out, just a gap area, right? So the daily charts are saying, okay, wait a minute here. We're at an area of support. And then what I like is on the 30-minute chart for the ES Mini, which has been in this downtrend here, that would be giving me the first signal that, okay, we're going to see a breakout. And prices getting right now is very close to the top of that channel line.
Yes.
And so if, in fact, it gets above it, comes back down below, tests it, and then takes off, then we're going to have on a then what at least what the market is signaling to us is that, there's going to be some hammering away and something taking place over the weekend.
Well, it's funny. I got the E-mini right now up on a 30-minute, and it's like, hey, we're going to 1690 right now, and we're at 1679, folks. When I bring that up, it's going to get interesting watching it shake out,
Absolutely.
So it's like, okay, and as Steve just said, this is what is really unusual, folks. When you have a down week, it's very unusual that you can come back on a Friday. If you come back on a Friday, you better not be short this market over the weekend. Steve Rhodes, Tom O'Brien, you stay right there, folks. We'll come right back.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a 3-fold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Steve Roach, Tom O'Brien. Appreciate you growling and prowling with us out here. And, folks, if you haven't test drove the Nadex platform yet, come over to our website at TFNN. You'll see the Nadex banner. You can hit it. You can open up an account right now. They'll put $25,000 of funny money into it. And what does happen, folks, you just need volatility. When we started the program off here, we were talking about, I was selling the gold market. But just so you can understand how that works, inside... When you're at the top of the boxes, okay, which that was because it was one from 10 to 12, and right now you're at 1308, we're basically at 1309, there's a 1310 to 1295 level. And what happens there is this, is that particularly on a Friday, you're at 1307 right now. When you're selling a 1310, well, my take, and I'll show you why that wants to go down there. Like, I've already got 40 of these on, but if I just did one right now, the risk is 400 to, you're risking 400 to make 1,000. I risked, I think, 500 to make 1,800 when I put that on at the beginning. So what happens is this. Number one, you can't get stopped out. But number two, now watch this when I put this up. When I put it up, what I'm looking for specifically, of course, is always high volume spikes down or up. Well, guess what? It's sticking out like a sore thumb. What's sticking out, and we get a Friday, is 1291. And you only need 1295. Now, that's the first part. The second part gets better. Than you don't need the full 1295. I already have an order in to buy them back at 1296.50. And the reason being is that when gold spikes, that's what it does, it spikes. So we'll see where it checks out. But if you are trading that product, do not sit there and wait for it to hit. Make sure that you actually have put the order in to buy them back, or if you're bullish, put the order in to sell them, okay? Because what ends up happening is when these spikes come in, they're going to be fast, but if the spike comes in, the whole book gets cleaned, period. It's a beautiful thing.
I bet it is.
I'm telling you, man. You know, it's amazing. I mean, we know. See, $10 in the gold market on a Friday is nothing. That's like, can you sneeze?
Absolutely.
It's crazy, right? I mean, it really is. You know, it's like, okay. So, let me look at these. It's going to be interesting because you get the. Yeah, she's building cars, man. This little mini, this E-mini, folks, is building cars. It's got juice up here. Last 10 minutes did 70,000 per 10 minute. That's refusing to back off. So that's telling me this next move is going to bring it to 1684. You get to 1684, that means we get game for 1690, and that would be today, folks. That's so. Next hour is going to get really wild watching this whole thing shake out, man, no doubt. Let's go to Costa Rica. Hey, K. Rico, what's going on?
It's a pleasure to talk to you guys on a Friday morning.
Isn't it? It's a beautiful thing.
Tom and Steve, you reacted like I did. I burst out laughing when I heard you say all those people are nuts or insane or crazy in Washington.
Yeah, there's no doubt.
I mean,
but that doesn't
really
mean that we have to let them change our lives. That's the other side of it, folks. Okay, that's the real side of it. Life's too precious to basically get hung up on it. So it's like,
hey, they're taking their eye off the big picture, and the big picture for me personally, in my world of work and whatnot, is Iran. It's all to me a terrible ruse. What Iran is pulling over the heads of our country to say that they're going to be good boys now and behave and let them. Have access to the nuclear program. I think that Israel's got the only right plan is to don't believe a word they say, period.
I think the right plan is to basically go to the beach, man, and forget all the politicians. The bottom line is, folks, control and power, you know, good luck to them, you know. What are we going to look at?
Well, it goes with our conversation, ego, E-G-O. These politicians have such terrible, tremendous egos that they've lost sight of reality. Anyway, I've been doing a lot of reading and research on ego, and if the EGO gets down to that bottom or below that 5.56 bottom, even below it, that would be my baby stock to watch for a real future. But I think gold, I think I wrote you an email, Steve, where I think gold is going below 1150.
Well, I think you got Tom in that camp now.
Yeah, well, I mean, it would just be a spike. To me, it wouldn't stay there. It's just going to scare everyone. Do you know what I'm saying? That's all I'm looking for. Because that's how it likes to trade. Right? That's how it likes to trade. Do you know what I mean? But if it does get into that area, what you'll have is that the spike will be fierce. There's no doubt about it. It'll be bigger than we think it's going to be, meaning. Do you know what I mean? So. You stay right there, K. Rico. Steve Rhodes, Tom O'Brien, appreciate all you Tigers and Tigers growling and prowling with us. The Dow right now is up 37, Nasdaq's up 19, S&Ps are up 8. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Steve Roach, Tom O'Brien. Appreciate you growling and prowling with us out here. Right now, you get the Dow up 43, Nasdaq's up 22, S&Ps are up 950, gold's at down 910. You get bonds off 12.6, and King Dollar is up $1.89. We're talking with K. Rico from Costa Rica, and we're talking about El Dorado Gold, folks, which is EGO, and he's looking for to come into that. Yeah, you know. The real key is going to be how do these all come into that June 28th price point, K. Rico. You know, if they come in with no volume, not bad. You know, because what you have had is that you came off that low of 550, you get up to 947. That's how fast and violent these moves are right now, folks, in the gold market. You know, this equity, when it came off the bottom, it almost went up 100% and then gave it up again. So.
Yeah, but what I'm thinking about is gold is over 1308 for all numbers and purposes right this moment. Another down to 1150, just taking that number, that's 1,500 points down from here. That should really, don't you think, put some scare into the gold stocks where they could break their lows easily? I mean, Harmony Gold is below its low of 335 for a few months ago already.
Yeah, it's 321. And Gold Corp basically is, trying to get into the level right now. It hit 24.93, and it's at 25.10. Let's see where Rheingold is. So the one.
K-Rico, is there a reason that you're focused on El Dorado Gold versus something else?
Yeah. I have studied each one of them as far as, okay, when I saw the spike a few months ago, I said, this is going to repeat cycle. For some instinctive reason, I said, we're going to see a low again. And so then I said, okay, I want to be prepared. Who didn't move much and who moved pretty violently for those lower minor gold miners? And the EGO, everything I read about it here, that I saved it in my email account, everything that I have read about it and studied makes me think that this could be the one. If it gets to like $4.75, that could be, the $11.50 gold price, and then that $4.50, I'm just surmising on EGO, that could be the one that could see a 40, 50, 75% jump, because that one is the strongest one that I have found in the gold miner juniors. I don't play the others because I don't like the leverage.
Yeah, no, I listen, man, and what does happen, what you have inside El Dorado, folks, is this. And this is really wild, but they have a decent mine in Turkey and in Greece. The Greece, they almost lost it, but they didn't. So there's real bread there. They're taking $1 billion. There's no doubt about it. So the expansion is there. No doubt.
If it breaks that June 28th low, though, you could see El Dorado Gold trade down to $2.38 to $4.
Oh, listen, man, no, there's no doubt. It is.
Got to be careful.
Let me tell you, folks, if we break these lows inside that gold market, oh man, I mean, the next levels down are like insane. Exactly.
Well, can I just interject the fact that I know this might sound nuts, but it's just like the dry dock shippers, the shipping guys, the DRYS, the EGLE. I swear to you, I had a short on DRYS at $99 back in the day when it was a high flyer, and then look where it leveled off at $1.80 for a year. So I'm just thinking in my mind that the possibilities of the gold mine stocks, the junior miners, could be in the same situation where they could be leveled down to what kind of ridiculous prices are these, where they almost would go out of business, and then gold could be, $1,100 for a year. Yeah, I'm just saying. And your EGO could be $3 or even $2.75, like you just said, Steve. One day we could be looking at a pop like you can't believe. That's what I'm thinking about also.
Cooking, brother.
Yeah.
Have a great one, K-Rico. Have a safe one.
Okay, guys. Good talking.
Yeah, there's no doubt, folks. Okay, what does happen with the juniors also, and that's, you want to absolutely be cognizant of it, is that half of them to three-quarters of them are going to run out of money and be out of business. Period. That's just the way it goes. It happens on a continual basis, and it's all about cash flow. And right now, inside the mining business, folks, they can't get any cash. And the reason they can't get any cash is because they've already got so much cash, and they basically blew their brains out using the cash. They didn't use it correctly. So people are saying, "Hey, I'm not going to give you any more cash."
Well, you've got one thought on the junior miners, then you've got the seniors. And when I take a look at the chart on FCX, to me that this equity has held up so well.
Yeah.
You and I talked about it last week.
Right.
And when the correction is over, it'll be very curious to see where FCX is trading at.
No, I agree. Because what you have inside FCX, there's no doubt, is that you have the largest gold mine in the world, largest copper mine in the world, and now they're getting in the oil business. You're talking printing money, man, big time. And you pay. They're paying a dividend right now of 3.69 at this price. So that has all the makings of an equity that is spread out. Number one, is in three commodities that are crucial. And folks, they take in $500 million a week. A week. Could you imagine taking in $500 million a week? How good is that, right?
Absolutely, that's right.
What's happening with my gold, man? So someone's buying gold right here. Let's take a look at this. So gold is only down $5 right now. Let me see if I get any volume behind this move. It was just down 9. So let's see. We hit a low out here with 3,500 contracts. Right now she's done 391, and it's just started. I have to wait a few minutes. We're only in 1 minute on this baby right now. Volatility's here in spades. This is going to be an interesting close out here today, Steve. Do you know what I mean? Well, actually, I think it's going to be the next couple hours. Wherever we are laid out at 12 o'clock is kind of, I think, maybe a bit. We'll see.
No, look, the thing is that on a after a week like we've had, well, first, the only thing that's really fallen apart, and we can't completely say that it's totally fallen apart, is the Dow.
Yeah, I know.
But if you start searching elsewhere, you start looking at all the other charts out there.
Yep.
You're just not getting that confirmation. And what that does is for everybody that has jumped on the short side of the trade, okay, they've had some benefits this week.
Yeah.
But they've got to make that decision coming into 4 o'clock. We're going to hold this position over the weekend.
Right.
And so you could have one heck of a short covering rally.
No, you could.
Alone.
And what did happen, from the lows of August, that Dow came back with a vengeance, folks. I mean, I was saying, man, there's no way you go from, 14,700, man. It just didn't stop, folks. I mean,
it didn't.
and both retracements. Now, the thing that's cool, though, is that both retracements, meaning the retracement now and the retracement last month, okay, were deep retracements. So that's telling you that the Dow is weak. And it's the weak dog and the whole ball of wax. There's no doubt about it. And, of course, the NASDAQ and the NDX 100, that is like Hercules at this point, man.
No, it is. And so that was one of those times where, when I take a look at shorting, I go to the weak players. When I take a look at going long, I go to the strength.
Sure.
But the last move off the bottom, the Dow caught up to everybody else.
I know, man.
It's just like, oh man, how's that happen?
Isn't that the truth? There's no doubt, man. There's no doubt. It's wild here. I just went over to Sears. Man, I hope our Tiger out there sold that Sears, man. This is pretty amazing. But it got to the swing point. That swing point was 68, and it hit 66. Okay, that's interesting. If you're listening out there, get rid of that thing right now, because that's what it was doing. That expansion. Sears went from $38, folks, 5 weeks ago, up to 66. That's a move. But guess what? The volume has just died on the vine extraordinaire. We should have been doing about 2.7 million, and it'll do 1.5 today. That for the whole week. That's what I'm talking about. So it's a problem. He better be going out there selling it, bringing his wife to the Four Seasons.
That's good.
I'm telling you, man. So
you take on light sweet crude and bonds out there. I know folks are interested in hearing that.
Absolutely, CLX3. So let's take a look. We'll start with that crude. So I like what happened. Well, not that I like what happened, but on Wednesday, that wide price spread at 104 saying, okay, to me, game's 110 again. It's like, really?
Totally. No,
so
totally.
That's what I'm seeing there. Today, what you don't want to happen today, we really don't want it to hit the 104.23 mark. We hit 104.15. Because there's not well, let me see. There's 53,000. Yeah, it's not even close to enough contracts. 53,000 is not enough. Inside the bond market, USZ3. So let's take a look at I like what this bond market looks like, man. I really like what this looks like. So the bond market, we're at 133, and you've been going sideways now for almost 2 full weeks. That's telling me that, guess what? This thing's going to bust topside. Now, the divergence, of course, Steve and folks, is that, I'm looking for the S&P to spike up.
Right.
Is that really going to happen? The S&P is going to spike up the dollar and the bonds. I can see it. But that would be a divergence in the context of how they normally move. There's no doubt about that. So we'll see.
And so that just brings you back to just trade the chart that you're on.
Oh, it totally does, man. There's no doubt about that, man. Because it's like, hold it, man. This thing wants to go topside. So, and the aspect of the refinancing business is done. So I can see it even on a fundamental basis. I'm saying, where's all that cash going to go? Guess what? That cash is going to go into those bonds. Because a bond buyer is not an equity buyer. You know, I mean, you know, you get the diversity when people say it's diverse, but there's plenty of people that are just bond buyers, and that's it. They want to get their principal back. They'll make whatever they make, and that's fine. You know, so.
Well, maybe our politicians they'll come together. They'll put together a great plan. You know, everybody will want to invest in both the markets and bonds.
Yeah, I figure, I think there's going to be. Well, hey, listen, I'm just being hopeful, but I think I think we're going to really get some. I guess it really depends on whether people are paying attention or not. That's the hardest thing. See, the hardest thing right now, folks, that I've seen, the amount of propaganda and the lies are on a continual basis, and
exactly
they just say it right to everyone's face, and it's continual too. It's not, now it's par for the course. It's like, oh, really? You know, so is that how we operate? You know, I guess that's how the operation's coming. I do expect, though, when people get hurt in their pocketbook, they pay more attention. And I think people will pay more attention. So, we just had a question. Was the SPY failure in the last 10-minute bar? No, it wasn't. Because what it did is that, here, let me bring up the future first. SP. So what we did, ESZ3. So what we've done, no, not even close either. Here, check this out. Oh, this is going to be cool, folks. So watch this. I love this when this happens. So watch it. You talk about an expansion of volume. Oh, baby. Here we go. We did 97,000 contracts at that high, at that 1681.75. Now, what that does is that is pushing into the swing point now with expanded volume. This thing's going to go. You know, we can build a little cause, but you have two different issues. The biggest one is that the high of today has volume behind the move, and you're going into, so check this out, we were only going into 80,000 contracts, and we just did 97,000. So it's taking that supply line up. So that tells me that at least we'll get the spike. Now the spike there is 1684.75. So that's the baby. Wild. Gonna be a long couple hours here.
I'm watching it with you. That's it. You know, for me, when I was setting things up this morning, taking a look at the market, I think it's very clear, and clarity is so powerful. And again, you know, we saw on the daily charts, we saw things moving back to an area of support, even in the Dow, and then was just able to go over to the. To me, I love the 30-minute chart on the S&P, and it's got such a nice descending price channel all the way from the highs that came in on that last Thursday after Bernanke, after the market made a high out there. And if it can bust above this area, you know, it's then on the shorter term chart, it's telling us, okay, markets are going to move higher. Somehow the market knows ahead of time.
I know, isn't it a trip? It really is, man. It's sick. I mean, when you really think about what we do for a living, it's crazy sometimes, man. Particularly, you know what's crazy, folks? It's crazy when you have these government shutdowns and all this stuff, because it's like, it gets tiring. I mean, that's, you know, if anything, the last few days I'm saying to myself, you know, I am so sick of these people, man, period. Just sick of the whole deal, you know.
Hey, just stay off the tubes. Go do your business. Go do your work.
That's right.
Go solve the problem.
Yeah, exactly, man, exactly. Steve Roach, Tom O'Brien, all you tigers and tigresses, you stay right there, folks. The Dow's up 43. Nasdaq's up 23. S&P's up 9.5. Gold's down 6. Bonds are down 9. King Dollar's up $1.49. We're going to be right back.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here with us. Right now, you get the Dow up 37. Nasdaq's up 22. S&Ps are up 8. You get gold down 6. And we'll see what where this is going to be rocking and rolling in the next few hours. What we are definitely going to need is a couple spikes out here to get some juice going.
You're our man in the real estate market, so you got your hands or your fingers in the jar out there. You been watching any of the real estate stocks in the marketplace?
If we pull up Lennar right now, let's say we pull up Lennar, what you're doing, and this is a nice setup. What you have here is this: we're at 35.29. You had your first spike off that bottom. Well, first off, you had a retracement. You had the first spike off the bottom. The spike, started at 31, gets up to 34. You get a sideways movement. It looks like it's rejecting lower price out here today, and it's looks like it could be a small ABC structure on the way up. You know, we have a high volume high at 37, 80, and 84, and you're at 35. If we get the volume out there, then you're going to really have action, because what you have is that you have a 7-point A to B, which will give you $41. And if you want to see a classic, folks, about how something comes into the bottom, well, this would be it. First bottom in Lanao is on August 15th. Low is 30. High is 33. Your volume out there was 9 million. Guess what? You go from 33, next day you go up to 34. You come all the way back. Okay, so as you come all the way back, you come all the way back to 31 with 4.4 million going against 9.6. So there's your test on lighter volume. Then what ends up happening, you start expanding up, and then we hit a high with 10.7 million. That's exactly what you want to see, man. So I like those setups, man. I mean, they're there, you know, and they're there in spades. So it's going to be interesting watching this whole thing shake out as to, and it's good. That right there, no doubt. You know, if we go back over to the 10-year for a second, we look at the 10-year. The 10-year right now is 2.63, and I think the way the bonds want to move, that 10-year basically wants to get into this 2 level again. You get into the 2 level, and you get some real action, man, because that's free money. I mean, it's not free money, folks. Okay, but let me tell you something. It's as close to free money as any of us, meaning not being a bank, is going to see. Banks see free money. That should be a bank. I mean,
yes. I mean, I can.
Yeah, there's no doubt, folks. I mean, that now you're talking. You get a bank with free money. That's absolutely where it's at. There's no doubt about that, man. It's crazy.
I mean, there's no question that you know, this is the time period, whatever time it lasts. You know, is most certainly the time period to be you know, to be buying real estate.
Yes. Yeah, there's no doubt about that.
To finance real estate.
To finance real estate, to buy it. And I can tell you, you know what has happened? You can see it, you know, across the country. In some places in Boston, right? It's already 2007 levels. I mean, you know, it's already not only come back, but it's come back with a vengeance. And you have a situation there that now it's going to be hard to afford it again for many people. You know, that's pretty intense, man, when you're actually thinking about it. Do you know what I mean?
Absolutely, yeah.
And I'm going to be buying. So I'm going to be buying some real estate in the next minute too.
Okay, perfect. I love it.
All you Tigers and Tigers, and you stay right there. We've got our man, Mr. Basil Chapman, coming up next, and then, of course, we're going to have Nico and Paige keeping you healthy. Have a great one. Have a safe one. Steve, thanks so much, man.
You bet. Take care. Okay. Have a good weekend.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on part, plus a 64% on rest at Hertz Global as a core position for 6 months before exiting the position. A current position entered as a turnaround company with good technicals based on Basil's waveform is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to the Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to the Opening Call, just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.